Hi, everyone. This is Jason Burack of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. He brings over 20 years of foreign affairs and political economic experience, beginning work during the Kosovo War as a liaison to the Albanians and in Europe as a political consultant for multiple political parties. He spent 10 years in Eastern Europe and the South Caucasus, including Georgia during the Russia-Georgia War. He's a registered defense broker for the State Department, specializing in geopolitical risk assessment, logistics, and defense industry overall. Since returning from Europe to Washington, D.C., he has consulted with many U.S. members of Congress in the House Foreign Affairs Committee, Appropriations Committee, House Agriculture Committee, and other legislative outfits on Capitol Hill. He is a true Washington, D.C. political insider, similar to a top lobbyist, specifically those who dealt with international relations, geopolitical risk, and campaign strategies. He's currently a political economic consultant for financial institutions and hedge funds, helping navigate the U.S. political, legislative, and financial processes. Albert, Marko, thank you for joining me again.
Oh, thanks for having me back.
So, Albert, we're recording this interview on Monday, April 15th, 2024. The 10-year U.S. Treasury yield, it's rallied a lot. The yield has. It spiked. It was, I think, at 4.2% only a couple weeks ago. It's at 4.63% right now. The dollar index has also rallied. It's moved up to 106.23. I think it was barely 100 or 101 only about a month ago. But I want to get your thoughts on Janet Yellen's kind of unexpected surprise trip back to China. Why do you think are the real reasons that she went to China? Because I honestly don't believe the press release is saying that she went over there to stop the Chinese manufacturing too many cheap trinkets.
Well, there was multiple reasons for Yellen to go there. Although the narrative of her going over there to stop the cheap trinkets sounds a little bit amateurish, it has a little bit of truth to it. She went down to China specifically to warn the Chinese that any kind of stimulus would result in financial repercussions to the Chinese. She needed to do that simply because she is fighting inflation 2.0 again. You know, they've gone full circle for the last 12 to 18 months of, inflation is transitory to inflation is solved and dead and it's coming down, and then right back to stage one of it's time to combat inflation before it gets out of control right before the U.S. elections.
Yeah, the cheap trinkets narrative, it doesn't make any sense to me because I thought the Biden administration and the policymakers here in DC, the Federal Reserve Bank, they want to fight inflation. And if China is going to offer cheaper goods, that would help reduce inflation. So it doesn't make any sense even on the surface.
Well, no, because the U.S. administration wants to make sure that the Chinese don't ramp up production concerning with an eye towards commodities. They do not want the Chinese pushing up copper any more than it can, steel, the price of fuel to manufacture all these items. It's a multiple phase strategy by the United States to basically suppress the Chinese. And as that's happening, Yellen goes on TV and says, we want the Chinese to stimulate further. I mean, the two comments, the reality in the comments that comes out of Yellen's mouth are so contradictory that they're just laughable.
Do you think that this is setting up more policy blunders? Because right before she left, didn't the news come out that she was threatening Chinese companies with sanctions, Chinese banks with sanctions? And then today there was another article that Congress is threatening Iran with sanctions related to oil and other stuff. What are the odds, the probability that we're going to see more policy blunders and like a Yosemite Sam type backfire moment similar to the Russia sanctions?
Well, it's pretty high. And the reason of that is not just because of her economic policies in the past has been suspect, but the White House interferes right now with both the Federal Reserve and the Treasury's actions. Right? They have a set agenda, which is to get Biden reelected, and they work on 3-month increments of polling data. Well, that doesn't really transfer over to economic policy very well. So the Treasury and the Federal Reserve have to play catch up and try to rectify some of the issues that the policymakers are imposing on the Treasury and the Fed.
Do you think Yellen also went over to China to ask them to buy some longer duration treasuries?
That's difficult. I don't think so. I think she had gone over to Asia to do that, but that's mainly for the Japanese to do. The Japanese love to buy U.S. Treasuries. They're not really a big gold buyer. The Chinese, on the other hand, are big gold buyers, and that's why you've seen this price of gold surge at the moment. I mean, most people in China don't have access to cash, and the bond yields are terrible over there. So their only option is to buy gold. Now, $3 trillion in the stock market that should be going into the Chinese markets is now going into gold. And now you see the price of gold at $2,400 and may even go to $2,500. But as the Fed and Yellen has shown in the past, they can hit the sell all button on commodities, and the next thing you know, gold, oil, and everything starts screaming downwards, and then they go back onto the parade of, we've solved inflation. Look how great we are, But that's just to kick the can down the road type of strategy, and most likely causes inflation to actually ramp up later on.
So you're saying that there's active, open market operations inside the Fed and Treasury to manipulate commodities or at least slow them down, but then there's the real world demand for it. Because in China, isn't there the risk of a yuan devaluation? So if you're in China and you have capital controls, you have a lot of savings in Chinese yuan, if there's a yuan devaluation, I mean, you're not going to want to hold their currency. That's one of the main reasons why people are buying Bitcoin and gold.
Yeah, that's exactly right. I mean, there's always the threat of the devaluation. I personally don't think that's going to happen just because Xi would look weak, and he does not want to look weak in front of 1.3 billion people at the moment. But the threat is there, and because that threat is there, that is actually driving up crypto and gold purchases.
But you said publicly on your Twitter, right, that there's literally hundreds of people inside the government with the Federal Reserve Bank and elsewhere kind of plunge protection teams that monitor commodity prices?
Of course there are. I mean, we're the issuer of the world's reserve currency and the biggest market in the world. Of course we would have controls such as that. They would break the glass controls. We have plunge protection teams. Usually this would be done in market turmoil times, not used for political optics. This is the difference here, right? I don't have an objection towards the Fed and Treasury having those operations and those teams in place, right? If it's done for the right reasons. But when you're doing it for political optics, that's going to do is create problems going forward.
You mean like how the Strategic Petroleum Reserve could be further emptied to keep gasoline prices down to benefit the November election?
Yeah, exactly. That's exactly right. That's exactly one of them, right? That's the opposite end of the spectrum, where it's the politics is deciding the oil market and whatnot instead of like the actual demand, right? So the SPR, however, they're actually almost at the absolute limit of what they can actually sell, because about 10 to 15% of the oil in there is actually dirty at the bottom. It's polluted at the very, very bottom of the barrel. So they can't even use that. Now they might still use it in terms of moving it around, but not actually putting it on the market or just saying that it's going out to the general market. But they're almost at their limit for the SPR.
I think the average person doesn't realize also that in the Securities Act in 1934, when the Exchange Stabilization Fund was created, so if there is a war, I mean, rationally people expect the stock market to crash, but then the Exchange Stabilization Fund is allowed to go in there and prevent the stock market from crashing.
Yeah, like I said, these are controls that the world's issuer of reserve currency needs to have in place. There's no question about it. We can't have the market, take 80% overnight. Or what would that do to our economy and our government structures? It would be mass chaos. So absolutely, you should have those mechanisms in place. Now, like I said before, using it for political optics because it's an election is absolutely disastrous. But we'll see how that plays out in the next 6 to 8 months.
I want to ask you about the Russia sanctions and weaponizing the dollar. Now, I've heard a lot of people publicly say that they went in and testified before Congress or in committees, and they said they warned the DC policymakers not to weaponize the dollar. Do you think that we're going to see more of that going forward, and that DC is going to continue to do dumb things and weaponize the dollar and kind of force the non-G7 to diversify further away from US Treasuries and the dollar?
Yeah, well, of course they're going to weaponize the dollar because it's their main tool to fight inflation at the moment. That's all they have because everything else, fails. It's more of one of those, throw spaghetti at the wall and see what sticks. Well, the only thing that sticks is keeping the dollar elevated. I mean, we've been over 100 on the DXY for 18 months, 24 months. I don't even know. I haven't looked at the chart, but it seems like, a distant memory since we've been under $100. I think actually we dipped under it not too long ago, but But that is our main tool. They are more than willing to use it. I think it's erroneous to use it in such a manner. But at this point, when everything else is failing, they're going to use what they know, and the dollar is the main tool at the moment.
I'm starting to see a lot of people predicting that other central banks are going to start to cut rates, but it looks like a lot of these other countries outside like the United States and emerging markets, they have weak currencies, they have inflation problems, but I guess maybe their governments cannot afford higher interest rates. So we're going to see what financial repression or yield curve control in those other countries first.
Well, yes and no, right? You have issues. So the only central banks that I even bother to pay attention to are the Anglosphere banks and Japan, right? So these banks are tied directly into the Fed, and the Fed uses them as guinea pigs into the market to say, okay, well, they'll call up Australia and say, hey, why don't you guys cut rates? We want to see what happens in the market on a micro scale, so we can properly assess what to do in the next 12 months, and they do that all the time. I don't think that the ECB can cut rates because their economy, although they say that their inflation numbers are coming down or have been trending down, it's only due to because their entire economy is in hibernation at the moment. I mean, the Germans are a shell of a country that they were industrially just 10 years ago. So, I don't even pay attention to them. I would say if you want to look at central bank actions, look at just the Anglosphere banks, which is New Zealand, Canada, UK, Australia, and Japan. That were the only ones that I think anybody should be paying attention to.
Do you think that those central banks will start cutting rates before the Federal Reserve Bank does?
Yes, I do. I do think that they'll probably cut rates in midsummer to test out the market, and most likely the Federal Reserve will probably cut rates end of July and maybe in September.
Yeah, you've said for months you didn't think there would be any rate cuts until September, and the market was wrong for months, and then finally it started pricing in those September cuts recently.
Yeah, I mean, the people that were talking about rate cuts, what was it, absurd amounts, like 8, 9, 10 rate cuts in 2024. You just have to laugh that off because everyone knew that inflation wasn't fixed. So, 1, 2 bad inflation prints, and all of a sudden those rate cuts have evaporated into like 1 or 2 for the year. But I do think that they're going to do a political rate cut. I think it's July 31st, and then probably another one in September, or or maybe September. But if they do one in September, it's not going to really affect the market as quick enough as they'd like. So if I had to put money on it, I'd probably say a July 31st rate cut.
Do you think the Fed is pretty happy about how things are right now coming into an election year? Or do you think that they're going to be more aggressive maybe to kind of maintain stability for an election year?
Well, I think that Powell and Kashkari are absolutely not happy of how things have been going. I mean, inflation's still a problem. On the other hand, the Fed members that were installed by the Biden administration after they purged the conservatives a few years ago, I'm sure they're happy. They have the economy and some kind of weird political narrative that is doing well, and growth is happening. I mean, they even had the revised retail numbers today come out that were doing well. But it's like they're a very bipolar organization at the moment, divided between Powell loyalists, which are very minimal at the moment, and Biden and Lil Brainard loyalists.
And yeah, Janet Yellen. I heard there was a fight after Silicon Valley Bank between Powell and Yellen.
Yeah, they don't like each other, but Trump made a fatal mistake by saying that he was going to fire Powell. So now Powell doesn't really have much reason to kowtow to the conservatives at the moment, because he's most likely out if Trump gets in.
So I hear lots of experts, macro experts, talk about fiscal dominance, but each Federal Reserve chairman since Greenspan has warned Congress about too much spending on the fiscal side. I know you speak to a lot of people in both parties here in DC. Is anyone actually talking about reducing budget deficits, reducing spending? Is there any serious conversations about that?
No, there's no serious conversations. I mean, they'll say that in front of the press, especially the conservatives will say that in front of the press, but there's no real talk about that. This you'll see the terms "new regime" thrown out there for a while, and that really references this new regime thinking of the Brainard and Yellen's and the administration. That's like MMT, basically, is where they just spend because they can spend, and they know that they don't have to pay it back. That's the thinking.
Well, as long as they get rich quick, right? Especially if Congress can do insider trading on stocks and no one's going to prison.
I envy Nancy Pelosi's P&L at the moment. It's quite stunning.
Well, there's dozens of members in the House of Representatives outperforming the S&P 500, and they're outperforming most of the hedge fund managers too.
Yeah, and it's ridiculous because 99% of those congressional members don't actually trade their own books, so they're actually feeding information from their staff to somebody to trade it. So, I mean, there's got to be some sort of violations. The Stock Act violations are probably getting broken every single day, but nobody's there really to actually prosecute these people.
And it's just shocking what the white collar criminals, I call DC the district of criminals. Most of the criminals here are white collar criminals and they have law degrees. They know all the loopholes or they get the laws changed. I mean, the Fed got the laws changed so they could start buying municipal bonds and even a small amount of corporate debt in 2020.
Yeah, the Fed doesn't even really need laws changed, to be honest with you. Right there, all they need is a word processor to change the Fed charter, and that's it. That's what most of the people in the world or the United States don't really understand. They think that the Congress dictates what the Fed can and can't do, and that's just not the case. All they have to do is change some words on a word processor, and their charter changes and their mandate changes.
Wow. And yeah, they also have an army of lobbyists and an army of lawyers to fight everything, to fight audits, and to get the laws changed when they need to, too.
Yeah, and they actually hold the keys to everybody's portfolio. So either you play ball or your portfolio is going to be, down 80% in the next 6 months.
So I have the budget deficits for fiscal 2025. The Biden administration is claiming they're only going to be 1.8 trillion. I have them much higher than that for fiscal 2025. Where do you think the treasuries, the demand for treasuries is going to come from? Are they going to stuff a larger percentage of them at like the too big to fail banks? Where do you think the demand for the treasuries is going to come from? Where are they going to put the treasuries?
Well, demand comes from Yellen's friends in the Wall Street world. Whether it's Larry Fink and all the other bankers, but that's where the demand's coming. There is no demand at the moment.
Especially on long duration treasuries, because everything's front loaded.
That's exactly right. Especially, that's the one I actually pay attention to the most is the long bond, is simply because I know that the Fed controls about 75% of it through their actions and proxies.
In your opinion, do you think that there's going to have to be commercial real estate bailouts, or do you think that they're going to be able to delay things past the November elections?
Oh, there's nothing going to happen before the elections. I assure you that. Everything's right now is under their control. They control the data, they can manipulate the data, and they only need to do that really for 6 more months. So they can put things, they can turn down the boiler for a little while, but at some time in some place, you got to pay the piper, and we'll see what happens after the election in that respect.
So you think they'll kick the can down the road as long as possible, hopefully until after the November elections, and then it's someone else's problem? That's kind of the attitude here.
Of course it is. And then you don't have to get reelected, so it doesn't matter.
It's just sad. And then meanwhile, the banks are getting away with accounting gimmickry. They're not marking to market the losses. So, I mean, it's we just see, I'm sure you see all the headlines with all the office buildings. It's definitely a problem. And at some point it's going to come, the chickens are going to come home to roost.
Yeah, that's right. I mean, I like to say that we're the new Gosplan bank because the Soviet Union collapsed. I mean, we're obviously not going to collapse in our lifetime, but it sure looks daunting for the future.
I spoke to someone who worked at the New York Fed, Christopher Whalen, and he's a real estate expert, institutional bank analyst. And he said that they're already discussing at the New York Fed because they've gotten all the presentations that the commercial real estate is insolvent. He said they're already talking about a reconstruction finance bank, but it seems like they're going to wait as long as possible.
Yeah, and that's a prudent thing to do. I mean, you do have to plan for such scenarios, and most likely that scenario is going to happen where we're going to need a reconstruction bank to swallow up all these commercial real estate NPLs. That's absolutely right. Yeah, but it's definitely going to happen after the election.
In your opinion, do you think these budget deficits in DC and these ballots are they inherently inflationary?
Yes, of course, but it's intentional. They try to they use these inflationary tactics to manipulate earnings for corporations. I mean, these are tailwinds for corporations and earnings, which helps them rally the market and keep the economy. The narrative that the economy is doing well and growth is actively rising.
Okay, so you think then that it's intentional what inflation for mostly they want asset price inflation. So they don't want like consumer price inflation and commodities inflation. They want the monetary inflation going mostly what towards stocks and home prices.
That's exactly right. Got to pay the boomers. They don't. They like their home prices up really high, and their 401ks really high too. You can't. They're in control. They're the ones at the top of the food chain at the Fed and the Treasury, and that's just the way it is.
Unfortunately, this creates wealth disparity because I just turned 40 last year, and like younger adults than me, I mean, like home prices are way out of reach for a lot of my younger adult friends.
Yeah, they don't care about they don't care about the younger generation. To be honest with you, they only care about their own families, and that's just the way they operate.
So it looks like then, based on the policy decisions from DC, we're going to have a bifurcated economy. Then, so there's going to be what the affluent people who have don't have exposure to variable interest rates, and they paid off their credit card bills, and they're benefiting from higher stock prices and real estate. And then there's like the rest of the 80 or 90% of Americans that don't have that.
Oh, you see it right now. There's nothing really to wait for. You see it right now. I mean, if you look at the home prices in areas like Florida and rural cities, I mean, they've exploded because the wealthy have moved out the cities because they don't really have a future in the cities in the urban areas. And you can see it right now. There's nothing. It's not hard to see it.
So you think then there won't be, and will there be any type of deflation then for more than a couple of months? Do you think that the people in DC, Federal Reserve Bank, Treasury, Congress, would they allow deflation for more than a couple of months?
No, they would not.
And the
They
attitude,
just,
the attitude then is it's not my problem. A year or two from now, we're going to juice the asset prices. We're going to juice the tax receipts on asset prices, and it doesn't matter what happens a year or two from now.
that's right. It's all short-term thinking for these people because they have to get reelected. So the administration and the political appointees, their jobs depend on being reelected, and that's all they care about. They look at 3 to 6 months out.
It's just sad. I mean, that compounds, all that thinking compounds over decades, and then you're stuck with this mess with the national debt growing by $1 trillion every 100 days or so.
Yeah, but the key thing here to see is that we do not have anyone outside of the United States to hold us accountable for our misdeeds, right? Europe is just absolutely gone. There's nothing in Europe right now, and there's nothing in Asia. Asia's not producing much and not doing much economically. So where is there a place for money to go outside of the U.S.? There isn't any. If you're a smart investor, you're looking around the entire world. I mean, do you risk putting your money in Vietnam, or do you just play ball with the United States and the stock market here that's been rising? It's not really a hard decision at that point.
Yeah, I agree. There's actually been like the last 6 to 12 months, there's been a lot of flight capital that's come into US stocks, artificial intelligence stocks, Mag 7, S&P 500.
Yeah, but that's intentional by Yellen. She knows this, right? She knows this, and she's actively suppressed the rest, emerging markets in China on purpose because they know that they want that money to come into the U.S. market. But at some point, there's going to be a point where China is much more attractive than the yields that you get in the United States and maybe even Europe in the next 3 to 5 years, and then we're going to have to see a real problem in the stock market in the United States.
Well, there's issues in China with the capital controls and foreign investors with private property rights. I mean, there's a lot of franchise owners, American ones that built businesses in China that had their businesses stolen and they didn't get any due process or private property rights protected in their courts.
Yeah, that's all understandable. That's all well known and whatnot. They have risk and capital parameters to take care of that. I know personally that there's a few funds, well north of 5 billion that are looking at distressed assets in China for the future.
That's interesting. Do you think then that their real estate market and their banking system are in trouble, or do you think that they're just going to do what debt monetization and quantitative easing, similar to what the U.S. did in 2008?
It's a little bit difficult. I mean, I know their real estate market is absolutely in turmoil, and that's really affecting G and whatnot. Their whole grand scheme plan is to pump their tech sector and pump out cheap products to the world. Right now, the United States, on the other hand, understands this. Yellen understands this specifically. She's dealt with them before, and her idea of combating China is to sanction their tech industry and hedge that with the Japanese yen at 170. And it's actually a pretty good idea. It's a pretty good plan, but the issue is like we talked about earlier about weaponizing the dollar. This is just another form of weaponizing the dollar because you're taking the Japanese yen up to 170, which is causing massive issues for the Chinese. So, like I said, it's going to be years before we start seeing actual real big cracks between in the United States' economy, specifically the banking sector, and then some kind of recovery in China.
That's interesting. You said that the Japanese yen would affect the Chinese markets because isn't the Chinese yuan has a dollar peg and it's pretty strictly enforced right now in a range.
Yeah, but that's only strictly enforced on paper. It's not really, it's not really applicable when in reality at the moment. So it's just a paper. It's just something they say, basically. So, if you're a consumer, if you're a manufacturing company, a tech company, you're looking at going to China, or you're looking at the Japanese, system and their manufacturing capacity and their quality. Why would you not? Why would you not go to Japan if the yen is at 170 or 160? And instead of taking your chances over in China, that's the question you'd have to ask yourself.
Isn't the goal for China, though, to move up the value chain for their manufacturing to turn into Japan where they're doing more high-end stuff at higher profit margins?
Yeah, but the Chinese system is so corrupt and it's so unregulated that it would be impossible. On top of that, the legal frameworks that are in place in China are just not satisfactory for being able to compete with the Japanese.
So over the next year or two, what do you think's going to happen to asset markets, in your opinion, based on Fed policy? Do you expect then the stock market to stay relatively high? Do you expect them to keep a lid on a lot of these commodity prices? How do you expect things to play out in the next year or two?
Well, and then I like to just look at the next 6 months because it's the election rally and whatnot, right? So the next 6 months, I would say that the stock market will probably hover between 5,100 and 5,600. And while commodities are probably going to take a beating in July, specifically oil, July and August, you might most likely will have a sell off in oil.
That's kind of counterintuitive because that's summer driving season, right? So normally the oil prices, gasoline goes up during summer driving season, prices go up.
Yeah, that's true, but it's also right in the eve of an election, which is a significant election because we're looking at Trump returning, which they obviously don't want. So, and they do not want families going into July 4th and Labor Day weekend talking about high gas prices and inflation again. So they're going to make sure that they're going to make sure that they hit the sell all button in that time frame.
That's interesting. I mean, we'll see how much of the strategic petroleum reserve they can get away with. I mean, if Trump does win the election, he'll want to refill the SPR, but that's like over a year away.
Said even if he wanted to fill the SPR, it would take at least 18 to 24 months to do it in a strategic way as to not give a floor to oil prices.
So in commodities, there seems to be a large divergence between like the gold price and the gold miners ETF, also between like the soft agricultural prices. So a lot of those soft commodities, those prices are up a lot with the DBA agricultural ETF, but the commodities producers are not. I know in the past you said you've liked fertilizer companies. Do you think that we're going to start to see farmers order more fertilizer and plant more crops soon?
That's difficult to say because it really depends on the planting season and the weather and rainfall and so on and so forth. And I really haven't taken a deep dive into the planting season upcoming. Just off the cuff, I don't think that it's going to be as strong in the beginning, but it probably recover towards the end of the summer.
So you expect then that like the soft agriculture prices that there's going to continue to be rallies in because it doesn't look like unless there's new supply or demand collapses. I mean, I don't really see either of those two things.
Yeah, well, this is also an election year, and you'll be seeing subsidies from Congress specifically aimed towards corn and wheat growers in the United States. So you'll see corn and wheat definitely rise.
Oh, you mean ethanol subsidies again?
Yes, that's right. Yeah, they do it all the time in an election year. I mean, you got to pay voters off, you got to pay your donors off, and that's just how it is. I mean, you can see how Biden has been giving away free tuition to everybody he possibly can to, make sure those voters come out to the voting booth in November for him.
I mean, he moved funds into old agencies for student loans that hadn't been really getting any funding for 60 to 80 years. He said it during the State of the Union address, and I've seen stories saying that he did 150 billion secretly of student loan debt bailouts already. It's just shocking.
It's shocking, and especially after the Supreme Court ruled against him, they just completely dismissed that and did whatever he was going to do anyways. But I mean, it's normal. This is election year, and voters have to be paid off, whether it's student loans or ethanol waivers, subsidies for different ags, and price controls on certain items. They're just it's going to happen. It's a normal part of the election season. It's just right now you're seeing it so you're seeing it like in multiples where they don't usually they're not this blatant about it, but they don't really care at this point.
So, if I could sum up some of the stuff you discussed over the course of this 25-minute interview, you think the dollar is going to remain relatively strong, but you think that there could still be relatively high commodity prices. So, counterintuitively, we could have a strong dollar and then also inflation and relatively high commodity prices then.
Yeah, I mean, we've seen these weird, the normal correlations that you'd see with the dollar acting opposite with commodities and whatnot. You've seen that completely just being abandoned in the last, just 6 months alone. I mean, the dollar up at 106, oil up at 85, gold up at 2,400. I mean, when have we ever seen that? And the market, rallying at the same time. It never happens. And because of that, you can sit there and determine that, well, the rest of the world is dead, and the U.S. market is being so manipulated that it's just absolutely crystal clear if you look at the charts.
And as bad as food prices, inflation, some of the other inflation is here in the US with like stagflation, I think it's even worse in a lot of other countries. So I think that's not helping matters that like the dollar is strong, but these people have to pay attention, look at the yen, like you said. I mean, these other currencies are really weak against the dollar.
Really weak, and it's not just stagflation, but we also have shrinkflation. So you have these items that you usually buy that are 20-30% smaller than what you would normally have bought in by 5-10 years ago, and those things go unnoticed for over the long term, but they're there. It's just different type of inflation hitting you.
And I think that commodities demand, especially gold demand and Bitcoin demand, I mean, it's not really, well, especially gold demand, it's not coming from Western investors, retail, US, Canadian retail investors. They have no interest in gold. There's GLD outflows. So it's almost all like China, Asia, Japan, India. That's where the demand is coming from. So it's like to hedge their own currency debasement.
Yeah, not so much the Japanese. The Japanese don't do that very often, but certainly the rest of the Asian community absolutely does that.
There's actually, I got sent a report by a gold company CEO. There's actually a huge spike in Japanese their gold ETF buying. So it's like the largest one, I think, in the last like 15 or 20 years. So actually, like the yen, there are some younger adult Japanese that are starting to buy gold. I think it's the first time in decades.
Yeah, well, I mean that would make sense then, because they usually don't buy gold, but if the yen is truly going to 170, 180, then most likely spike in precious metals is definitely going to happen in the Chinese. Actually, I mean in the Japanese. And actually the other thing that they use, quite comically, believe it or not, is whiskey. They buy a lot of whiskey, as a commodity, as a safe haven.
Well, I have hedge fund manager friends that collect like aged scotch and aged whiskey, 18 years old or older.
Yeah, well, they use whatever. They use watches. They use luxury whiskey brands. They'll use precious metals. They'll use anything. I mean, look, humans have this great brain that they use to arbitrage whenever currencies are getting a little bit weak. So those are interesting little tidbits to see. You can't really play that, but it's just an interesting note, side note.
Well, the other part of this is like all the people in power in Europe and Washington, D.C., the US, they have all these green energy projects, ESG projects. I mean, all the stuff they have planned, electric vehicles, data centers for artificial intelligence, all these things are going to use an absolutely insane amount of electricity and copper and stuff like that. And I don't think the policymakers figured out that they need like cheap electricity and that they need like all this copper. So they put the cart before the horse, unfortunately.
Well, I don't know why they didn't see that coming. If you just all you have to do is look at Germany, who took away their nuclear power reactors, and they've pushed EVs, and all of a sudden the prices of energy in Austria and Germany are absolutely through the roof. So there's no reason why they shouldn't have seen this coming in the United States. I mean, even I think it was yesterday, or was it even today, probably, that I saw that the reports about consumer prices of energy has just skyrocketed.
Yeah, California is talking about like Atlas Shrugged. They want to price electricity by what people can pay and charge people who can pay more, way higher price. So it's not like normal market prices.
That's absurd. I mean, that all that's going to do is spike buying and off grid solutions, whether it be solar or wind or combination with geothermal and whatnot. I mean, that's what I would do if I was in California at that point. If you're making $500,000 a year, $1 million a year, and you're looking at energy bills based on your income rate, like they do in, I think, Finland or Sweden when it comes to speeding. If you get caught speeding, your traffic ticket is compared to what you're making a year. So you and I would probably get, a $500 ticket, and somebody else would be getting, a $50,000 ticket. It's absurd. It's a terrible idea. It's not going to work. The budget projections and the revenue projections, taking that into consideration, the calculations would be absolutely destroyed. And then you'd probably see an exodus of people, wealthy individuals leaving the state.
Well, you're seeing that with small business owners. I mean, they're leaving California. They've been leaving for the last like 5 years. Even before the pandemic, small business owners were leaving California rapidly, and it's only accelerated.
Yeah, and the more desperate the states get for revenue, the higher taxation goes, and then you get into this doom loop of the wealthy leaving the state. So you have more budget holes, more revenue holes to plug than you know what to do with.
Exactly. And that's, I think, one of the real reasons for quantitative easing, because the Fed started buying in 2020 municipal bonds to fund those states when they ran short of funds. So I think, unfortunately, we're probably going to see that again. The real reason for quantitative easing is to buy U.S. Treasuries, bail out corporations, and then probably also start buying municipal bonds again.
Yeah, I mean, 2025 is going to be quite a fireworks year for everything economic.
Is that just because of what the budget deficits, DC spending, what supply rolling over the debt? You think how much it's going to take of the tax receipts?
Oh, I mean, we could go on and on about that. I mean, it's just all these compounding issues being pushed aside and rolled over to the next administration, whether it be Trump or Biden. They're just compounding, and when you compound things, things go off the rails really quickly and really badly. And I expect something in 2025 to go really badly.
Yeah, I agree. I've seen projections from a Bank of America analyst. He was saying that the interest payments on the debt by December could be 1.6 trillion annualized. Now, I've spoken to other people who think that number's high, but if we get anywhere near that, I mean, that's a lot.
Yeah, I mean, Yellen is the country's CFO, and she's done an absolutely miserable job of conducting her job to make sure that that doesn't happen. But they don't care. Like I said, this is a political operation right now. After the election, it's a different story. Now, if the Biden administration wins, I don't know what they're going to do. Right? If the Trump administration wins, then they have no cares in the world about tanking the markets and tanking the economy because they just don't care.
Well, I think Trump would be in favor of rate cuts, right? He would want to go into some type of supply side economic stimulus.
It depends on what's happening in inflation. If he takes over January 20th of 2025 and inflation is 5.5%, rate cuts is out the window. You just can't do it. So it really depends on what happens in that time frame between late September and January.
Okay, and you think then that the Wall Street banks, Yellen's friends, or like the either hedge fund managers or institutional investors are going to end up buying the treasuries? You don't think then that foreigners will come back, or they're going to stick treasuries in people's retirement accounts, force people, like say in your IRA or 401k, you're going to have to hold, I don't know, like war debt, like a couple percentage points of treasuries?
I would see that. I would see a difficult path for that happening.
Well, I mean, they tried that in wars, right? So they tried that like in World War II to sell war bonds and stuff. So the governments have tried that in the past, although not recently.
Yeah, it was not recently, and there's not really a justification. War is a different animal, but there's nothing really to justify them forcing institutions to do that, and they'd probably get a lot of political pushback. So it would. I just don't. I don't think that would happen.
I want to thank you so much for your time today. There's a lot of interesting insights in there. The bottom line is here, there's not going to be a lot of change in Washington, D.C. It's both political parties, like you said, and I've heard this from many other sources too. No one in power in like significant in Congress, the White House is actually talking about spending cuts. It's actually the opposite. I mean, I hear people wanting to spend more. What on subsidies for Israel, Ukraine, infrastructure projects. I mean, they're actually talking about wanting to spend more.
Yeah, that's just the reality of the situation. Although all congressional members that say, "Well, we want spending cuts," across the board. Yeah, it's across the board except for my board, right? And that compounds with 435 senators and 435 congressmen and 100 senators. It's just not going to happen. There's no spending cuts happening in an election year. I assure you this.
And that's why the Washington, D.C. metro area, we have 5 out of the 10 highest average median family income counties in the whole country. And it's going to stay that way.
That's correct.
The Cantillon effect. So thank you so much for your time, Albert. If my listeners want to take a look at your newsletter, follow you on Twitter, X, how did they do so?
My Twitter handle is am live LIVEMON, and there's a website in the bio to follow me to a newsletter that me and Tony Nash actually publish weekly, and videos and whatnot.